The Bank of England cut by 25 basis points this morning, but it was a mixed one with a couple members looking for 50 basis points cut and a couple looking for no cut at all. So we saw the pound versus US dollar move lower briefly and then bounce back higher. We're seeing the euro versus US dollar lower, the dollar versus yen moving higher. So I'll go through the technicals that are driving these currency pairs in this video. So let's get started. Let's start by taking a look at the euro versus US dollar. We'll focus here on the hourly chart, and what we've noticed in trading here today is once again this area down near the 71 to 73, maybe down to the 65 level, is continuing to hold support. This is the hourly chart. The low prices today came down just a little bit below that 73 level, and but just above the 65 level. Recall the 65 level was this low going back right here, and then we last week we came down to that level, found support buyers against it. Once again, the 73 level. Again, going back to the daily chart, if you've seen my videos of late, if you take a look at the 2020 high to 2022 low, the 61.8 comes in at 1.1271. This high price right here came in at 75. That's the 2023 high from July. So the 71 to 75 level is earmarked with a line on the hourly chart at around the 73 level. That's this red line right through here, and you can see how it just dipped a little bit below that level, but above the 65 level. Saw the market move back to the upside here after just testing in the last hour or so of trading once again. So support is holding on the top side. However, what do we see? We saw the 100 and 200 hour moving averages hold resistance on the rebound in the Asian Pacific session, and that kept a lid on the pair and gave the sellers a go ahead to push to the downside down toward that 73 level. So these 100 and 200 hour moving averages will remain as resistance on the top side. We need to get above those levels and stay above those levels. We've tried a lot over the last few days of trading to get above those levels, but without any avail or any consistent momentum, I should say, and that has given the sellers some hope in what has been mostly a bullish market since the month of March, so we'll see what happens. But 73 level holds, or 71 to 74 5 level pretty much holds. 100 and 200 hour moving average on the top side are the key resistance targets. Let's take a look at the dollar versus yen next. And this currency pair moved up in trading yesterday after basing against the 100 bar moving average on the 4 hour chart, not once, but twice. And rotating back to the upside, we came up to the 100 hour moving average. That's this blue line in this chart, and found willing sellers, but something had to give between the 100 and 200 hour moving average as traded between those two levels, which were converging at the time. And finally, the market broke to the upside based against the level and pushed even higher. We've since seen the price move above this area right through here, where we had some swing levels going back here. Admittedly, it's not the best of levels that I've seen, but nevertheless, it added to more bullish momentum here. The 200 bar moving average on the 4 hour chart, which is moving lower, is the next hurdle on the top side that comes in at 145.18. Recall from last week, the price high came right up to that level, found resistance sellers against that level, pushed down to the 100 bar moving average right down here, finally fell below that level, and then based against it once again in trading yesterday, not once but twice, before moving to the upside. So 100 and 200 bar moving average, I still think are levels that you would want to watch as traders on that 4 hour chart, sort of the bookends for support and resistance, and that it would be the next key target on the top side. Move below the 144.45 level, and then get below the 38.2% retracement. That's at 144.208 would be more bearish for and disappoint the buyers looking for more upside after moving above those levels and trading here today. Finally, let's take a look at the sterling versus US dollar. As mentioned, the Bank of England did cut by 25 basis points. That led to this brief move to the downside here, which took the price below this floor area that developed with a number of different swing lows here in trading, not only this week but last week. And we did try to hold that level ahead of the interest rate decision. Well, we actually did, until the interest rate decision and pushed lower off of the headline news. But what did we do? We found support against this low right here and quickly rebounded to the upside once we saw the voting tally. Since then, the price has moved up to the 100 and 200 hour moving averages. Governor Bailey is speaking as I speak. That 100 and 200 hour moving comes at 1.3313 and 1.3333. We're going to need to get above those levels and stay above those levels to increase bullish bias. Have traders looking toward the swing area and then look toward our swing highs through here that have capped the pound versus US dollar. I want you to focus here on 133.33, and that significance comes from the daily chart. If you look at this high price right here from 2024, it came in at I think I said 1.3333. No, it's 1.3433. That's this level right through here. And as we saw on the hourly chart, we did come up short of that at 23 here. Here's a 33. Then we broke above it, moving up to 41. That didn't last very long. And we started to use the 23 level as resistance again before moving to the downside. So this 23 to 41 level is a key on the top side. If we should break above the 200 hour moving average, just kind of keep that area in mind for a number of different reasons. So there you have it, a look at the three major currency pairs to kickstart your trading day here for May 8th. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.